For all verified facts, subscribe to our YouTube channel and click the bell icon to get the latest updates.
Hello and welcome to From the Front Lines. I'm Govindraj Ethiraj. A IMF World Economic Outlook report has projected that India's per capita GDP is going to shrink in nominal US dollar terms to $1,877 in 2020 versus Bangladesh, which is going to be at $1,888. The difference is not much, but Bangladesh is higher, and this has been a bit of a surprise to some people. Partly this has been caused, or largely it's been caused, the slowdown in India, that is, by the lockdown that we've had, and of course the pandemic, which have affected economies around the world. It's also expected to turn around quite quickly by next year. But more importantly, India is going to see a contraction in GDP, whereas Bangladesh is likely to see an expansion in GDP, though at a lower level compared to previous years. So the question is, what is the reason for Bangladesh continuing to grow as an economy versus many other economies? India is not necessarily being compared here. And what are the insights, if one can get from that? To discuss that, I'm joined by Dr. Ahsan H Mansur, chairman of BRAC Bank, which funds small and medium enterprises in Bangladesh. Dr. Mansur has previously worked with the IMF as division chief in the Middle East and also founded the Policy Research Institute of Bangladesh. Dr. Mansur, thank you very much for joining us. So broadly, could you tell us what has sustained Bangladesh's economy in the last year and through the pandemic, given that the numbers seem to suggest that the economy will continue to expand, whereas in most parts of the world, economies are contracting?
Thank you very much for giving me the opportunity. I think Bangladesh has been doing remarkably and steadily quite well in terms of macroeconomic performance. It didn't have any balance of payment shocks in the last 20 years or more, or 30 years even. So the macroeconomic stability has been one of its founding cornerstone, and that has helped the growth process to be sustained. And it also maintains exchange rate stability related to Indian currency. That's why dollar terms, there is an acceleration of growth in Bangladesh compared with India because of the exchange rate stability factor, which is underpinned by solid macro foundation. Bangladesh's macroeconomic performance is also a reflection of its very prudent fiscal management. The fiscal deficit is very much under control, between 3.5% to 4.5% generally. Despite the fiscal target being set at 5%, it usually is less than, outturn is less than the fiscal target. So that's a very, very strong performance, and that anchors the economy performance in terms of inflationary performance, in terms of exchange rate stability, and also it is underpinned by good solid external sector developments, like exports historically has done very well, double-digit growth on average for the last 20 years, if you look at it. Remittances have done very well, and also remittances have worked as a counter-cyclical factor. Even during this pandemic, the remittance is all-time high. And not only simply high, it's about 20% plus compared with last year, same time. So it's acting as a very much of a solid shock absorber for our economic system and for the rural economy as well. So these factors add up. And the result is that although Bangladesh has not done too well in terms of economic reforms in the fundamental sense of it, which we always complain about, but its export performance, remittance performance, and the resilience of the private sector in the domestic economy, in the competitive behavior, and has made this growth very much an impressive outcome that we can see.
Right.
And it is not a phenomena of this year or last year. This year we have done much worse than any of the recent years, but that we understand it is because of COVID and so on. Thankfully, we are not in the negative territory as projected by World Bank or IMF and any other organization. So in that sense, there's some degree of comfort, but it is not as good as one would have expected without the COVID situation, which was in the range of 7 to 8% level.
Right. And just a broad sense, I mean, I've seen, I think, two different figures from World Bank and IMF. Is this, or is it the same figure? What is the consensus GDP estimate for 2021?
You see, the government is gung-ho and very much on the unrealistic side. They're still saying that the country may be growing at 7-8%. That I don't believe.
Which was last year.
No, this current fiscal year.
Yeah, no, what I meant is 7-8% was what you saw last year, right?
No, last year we saw 5.2% because of the.
Okay.
Our fiscal year runs from July to June, June to July.
Right.
Sorry,
okay.
July to June.
Yeah.
So it is half yearly. Like so, in that sense, just we finished just fiscal year 19-20, and we are in the first quarter of fiscal year 2021. And in the 2021 fiscal year, the government is very much bullish, but I don't think it's going to happen. We probably will end up getting what IMF is projecting. World Bank is projecting little less than IMF.
Right. Okay. So you mentioned two things, and I'll come to both. So firstly, you said exports. Now, how has the pandemic affected exports, particularly in the last 6 months? And what are the numbers or the early numbers showing? I mean, is there a reduction or contraction? And what does it also tell you about how global demand is right now working to your advantage?
You see, the initial shock was very severe because of the lockdown, like any other country. So when the lockdown started in the late March, but April figure was very bad. May figure was also extremely bad. But then the recovery started, and started quite robustly. By July and August, actually the export level for the month of July and month of August was more than the corresponding period 2019 July and 2019 August. So in that sense, recovery is quite strong. But if you look at the whole period from April, May, June, July, August, then of course we are still about, I would say, about 80% category of the corresponding 6-month period of last year. So it's an impressive recovery, I would say.
Right. And could you tell us, I mean, if you have a sense on how exports are doing? Because, you know, I mean, we've seen demand contraction, let's say garment exports, which is a strength for Bangladesh. There has been demand contraction from most buyers in Europe and North America for sure, including, stores and chains of stores which were shut for many months. So how is it that, you're still seeing demand growth? Is it because business is, are you pulling manufacturing capacity from somewhere else, or is it some other tariff related reason?
Well, we have preferential access to European Union market, and that is still there. That was there all along. So that is not a change factor. But what is probably happening is that, as I said, that we are still overall in the 6 months, we are still probably down by about 20% or so. So we are down, but we are not as much down like India or China in the RMG sector, in the US market, for example. So we are much better in that sense. In European market, we are probably the least contracted in that sense for the 6-month period. But for the last 2 months, 3 months, we are very much at the normal level. So there's a catching up factor. Some of the orders which were postponed or cancelled has come back again, and the factories are working. And even some factories are hiring not only the old staff, but they're hiring new staff. So there's some good news in certain factories, but it's not uniformly that everybody has this 100% level. No, I would think on average they are operating at the 80%, 85% level.
Right, and what's the elasticity, if one may call it, of garment exports to overall GDP?
I would say that while garment is the single largest important export factor, accounting for more than 80% of our exports, but it is still about 15-16% of our GDP. So to that extent, it plays an important role in the manufacturing sector. It's the largest component in the manufacturing sector of the country, and it has a very important role for secondary impact on the economy through the workers' salaries, etc., etc. And the government also played a very proactive role. They helped the garment industry to pay their workers even when they are out of work. So by giving them cheap credit of 8,000 crore only for garment workers to be paid directly to their bank account or Bcash account. So that was a very supportive measure on the part of the government.
Right. So if you're saying, if you're saying that the economy is going to expand for this fiscal year, now governments obviously is going to play a significant role. But are there other parts of the economy that are also growing? Net positive, and equally, are there other parts that are dragging it down?
No, it is uneven. It's going to be uneven growth. Certain sectors like electronics, they are doing very well. Certain sectors suffering, like services in general. You can say that hotels or travel, those are traditional, that across the globe, those sectors are down, and they are also down in Bangladesh. But still, our restaurants are doing very brisk businesses now. It's open and people are going. So there's a lot less fear factor than in many other countries. I don't know, we have COVID. The intensity is probably underestimated by the government. But nevertheless, I think the severity of the disease, of the impact of the disease, death rate is quite minimal. And that's why people are not too much concerned about the disease factor, other than people like us who are older.
Right. So you mentioned remittances going up 20%, Dr. Mansur. Now, that's a very interesting figure because even in India, for instance, remittances are expected to be down and are down because, let's say, workers in the Gulf or Middle East have seen a dip in their own incomes. So how is it that in Bangladesh, the trend is a little different?
This was a puzzle for us also, and still remains, I would say, unexplained. All that we can say is hypothesize what could be the possible factors. One factor that we think of is that some people are coming back from Gulf, and they may be bringing their own savings along with their departure. So that's not a very good news. That's not a sustainable thing, which will impact us down the line. Second factor is that, which may also be a very important factor, is that a lot of people who are staying in the outside Bangladesh, not impacted by the COVID or by the job cuts, like in Europe, America, and also partly in Gulf, they are sending more money to their relatives to support those who have lost their jobs or have been impacted by the flood, etc. So the amount of inflow to their kin and kids they have increased quite significantly. There is also a third factor. The third factor possibly is that there's some portfolio shift as well. Some people who are working or living in US, North America, and in Europe, and also in Middle East, they may be shifting their savings part of it because the return on their financial savings is marginal or nothing in those countries. Bangladesh still have a good rate of return on savings instruments of various types. So these three factors probably explain. And there is a third factor, which means the electronic transfer mechanism through bKash and other arrangements, mobile financial system network, is working quite well and increasing very rapidly. So some money may be moving away from hundi and coming to the formal channel. These are our explanations, but it's hypothesis.
Right, but it's interesting that you say that people would be moving savings because obviously interest rates are higher or there is an interest rate differential at this time.
Yes, quite a bit of differential between Bangladesh interest rates and the global.
Right, and people feel comfortable to bring their money back into Bangladesh and then take it out again if they want to. Is that? I mean, is there a sufficient free flow?
It's not legally always free flow sufficient, but you can put a premium of 1 taka, you can take it out. With hundi system and other means, it's not a difficult thing. People take crores of taka, hundreds of crores of taka, so it can be done.
Right. Last question, Dr. Mansur. So, as you look ahead, what's the one challenge and the one opportunity that you see for Bangladesh's economy?
There are opportunities as well in the middle of these things. I think our garment sector is very resilient and they need to transform themselves also. And if they can do it successfully, this sector has potential to go further. Second opportunity is that companies are moving away from China. And if you can get part of it, India is also in that game. India, Indonesia, Vietnam is a big winner of that, of course. If you can attract some of those things, that will be a good opportunity to bring and diversify the economy as well. And I think finally, we need to, a lot of efforts are going on to improve the doing business indicator and infrastructure development, which if happens, including the special economic zones, etc., we may be able to turn around on the FDI front, which is not a very bright thing for Bangladesh as of now, or until now.
Right. And what's the one challenge?
Challenge is that if the world is not doing well, we cannot do well. So we have to we will be impacted by the global development. We cannot do anything about it. We have to live with it. But within that, we have to operate. So that is the biggest challenge. And secondly, we have to also manage COVID better, particularly coming vaccination programs, readiness to that. That's an area that concerns me. I would like to see government much more better prepared than what I am hearing so far.
Dr. Mansur, thank you very much for joining us from Dhaka in Bangladesh.
You're welcome.